Happy New Year. I'm glad to be back. Will 2025 be the same old bull, or do the bears come out of hibernation? This is Invest with Jacob. Okay, guys, so I'm glad to be back. Happy New Year. And while I was gone, the market did make some wild moves and has been kind of all over the map. And this, of course, brings the geniuses out of the woodwork. In my last video, I said there is still a setup to 6,300, and I gave support levels and key levels for this. Obviously, these folks don't listen, as most people on the internet don't, and made their genius comments, and this is the crux of what goes on here. If you listen to what we actually put out, yes, I give a high and a low target because key levels matter, and the market changes on a whim, and you better know where the key levels are so that you can trade them. Now, it's easy to sit here and say that, but here are the last 2 months of trades in this wild market that we've had since the start of November. Here they are. We've crushed it. We've done really well. And just so you don't see a spreadsheet up here, here's a couple of examples of the actual trades so that you can see that they are posted in my room. They are real trades, and we are making money in this market. We understand when and where to enter and when and where to exit. Are there some losers on there? Of course there are. No one makes every trade a winner. That's life. But we make a lot of winning trades and a lot of three-digit winning trades. And that's what we do here. And if you've watched the day trade indicator, you're going to see an incredible day from yesterday. Oh my God, we absolutely crushed it. And I'm going to show you something that we saw from while I was out. So this is where we're at with the market. We're in wild swings. I've been warning about a top for over a year. So all these guys who think I'm crazy for calling 6,300 obviously don't know that I'm looking for this market to actually top and turn down heavily. But that will happen when support breaks. And that's what we have to listen to. So with the wild moves in the market, are we now in a bear market? Or is this going to be the same old bull all year? I'll get into that in just 1 second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, as always, before we jump into the actual charts, we're going to take a look at our day trading and swing trading indicator that we built for TradingView. Absolutely crushing it. Guys, you're not going to believe what you see from yesterday. And by the way, if you were trading over the last 10 days, day trading, I highly advise against that. I did it in my room. I told people it's going to be a choppy market. Stay out of the way. Let the holidays go because it's low volume trading, and don't trade those days. It's just not a great trading environment in general. So yesterday we absolutely killed it on the day trading indicator. So let's jump into that chart and take a look. Okay, guys, so here we are on the 5-minute SPY chart in TradingView. Now, if you're new here, we have built an indicator that is a day and swing trading indicator. So if you like day trading, we have that. If you like swing trading, we have that. Covers both types of traders. It's actually really good for buy and hold on the swing side as well. So what we did is we created an indicator. You have to have TradingView to use it. So if you have a TradingView account, you can put it right in there. It's called the IWJ Pivot Point Pro, Invest with Jacob Pivot Point Pro. I'll turn it off. You can see the buy and sells on the screen. I'll turn it off and on so you can see that they go away and come back. It's an actual indicator. I'm not just making this chart to put up and pretend like it works. So off of the high, or off of the low, right out of the gate, you got two low bars, and we got a buy right here at about 587.21, and rode it all the way up to 590. So a quick 3-point kill right out of the gate. Absolutely awesome opening trade, open to the year, great start. Then they turn right around and give us a sell right here, 589.66. We rode that down here. We actually got stopped on the pop there. So 586 from 588, or 89 rather. So another 2-3-point move down right there. This buy failed, so that was a stop out. We lost about 20 cents or something on that trade. This buy here was a small winner. So you had 3 winners now, small winner there. And then, of course, the crusher here. We get the chop, and then it gives you the sell right at the top at 587. You can see on the screen where we entered. We rode it all the way down. We got in at like $1.48. Our last take was at $6 down here. You think that's a pretty fun day? You think we've crushed it? You know how many traders we've helped with this indicator understand how to trade the market because they don't have to look at 1,000 things? The indicator is price action based, so it understands highs and lows. It understands the volume profiles, where the high volume nodes are, how to trade off of them, and it trades based on price action. It's forward looking. It is not backwards looking. It's not based on a trend line or moving averages that crossed 6 bars ago and now you're finally getting in. It's based on actual looking forward price action data, and that's how we get these highs and lows. You'll see that almost all of the bars come in near highs and near lows. If you kept trading throughout the day. You probably still did really well on the back end. I always stop at 10 o'clock Pacific Standard Time because the back end of the day is usually very choppy. You can see here it's pretty choppy, and it's really slow. So the day trading part of this is early on in the day. You want to get these moves, and we hit 3 monsters, and including this giant one here and 1 small loser for an incredible day. And then on the flip side of that, this is a swing trading indicator as well. If you go back and look at my last 5 or 6 videos, I went through some different stocks like Nvidia and I think Netflix and Amazon, and it showed you how great this indicator is at finding the highs and lows for swing trading and buy and hold trading. If we go to our weekly chart, while I was out, it issued a sell last week. Now we wait till the weekly close on these to make sure that the sell hits. It closed with a sell right here at 595, so you would have gotten in Friday at 595, and by Tuesday they were all the way down here at 580. 15 SPY points in a few days because you had the swing trade indicator. You take a profit and then you hang on to some, and let's see if we can get the runner and the breakdown for the rest of it. So an incredible swing trade here as well. Again, 595 all the way down to 580 today. They broke the low and hit that, and then we still have another day as we move on throughout this. But you had 15 points immediately here on this swing trade, absolutely killing it. So over here you might see, hey, here's a sell. What happened here? Well, one, of course, we don't win every trade. And what happens is we get in here. So we got in at 561. The sell stop right here came in a couple weeks later at 571. So we lost $10 of SPY points there. But the sell stop tells you that it's continuation of trend, meaning to get long. So we got back in at 571, and the market went all the way up to 608 for 38 points. So yeah, you lost 10 points here and then got 38 points back here, and did have yourself safe in case it does crash. So when you get a sell stop or a buy stop, it means to continue the trend. So the trend was up, it said to sell, that sell stopped, so you get long again, and you got this huge run up here for 37 points before you got your next sell to the downside. So we're absolutely crushing it in our day trades and our swing trades and our rooms, how we trade these levels, and we want you to be a part of that. If you want this indicator, here's how you get it. There's a link down in the description. Click that link, and it will take you over to our webpage where we have the indicator for sale. It's $59 per month. As you can see from what we did just yesterday, it will pay for itself so fast you won't even worry about the $59 a month. That is going to be nothing of a cost to you because it is so effective on understanding the market and helping you win at day trading. It's helping so many traders do that. Here's the cool part about it though, guys. I want you to have this and I want you to succeed. So I do give a 30-day money-back guarantee. If you get this indicator, go ahead and try it out. Sign up. It's $59. Use it for 30 days or even just watch it for 30 days. If you don't want to trade it, no big deal. And then if you don't like it or it's not for you, shoot me an email and I will issue a refund for that because that's how much I believe in this indicator and that's how much I want you to have it. So 30-day money-back guarantee on both the monthly and the yearly. And again, that's because I love this product so much. Down low, you can see what people are saying about it. They're absolutely crushing. You saw what people were saying earlier in the video. Guys, this thing is helping traders make money in the market, and I want you to as well. All right, now let's jump into the charts and take a look. Okay, guys, so here we are on the 2-hour futures chart for the S&P 500. And when I left, I said the big question is this all of wave 4? Or is it A and we need B and C into this blue box? And it does look like, obviously, we need B and C into the blue box. We bought down here and got this B wave up, which was fantastic. We did short and make some money on the way down as well. And now we're going to see if and when they break through. We're looking for them to get into this blue box area. The actual 1.0 comes in here at 57.85. There's a lot of support right here. There's a 50-week moving average. There is fib support. There is chart support. So this area right here is a big area for the bulls to defend. If they get down into this blue box and the bulls do not defend, that is a major warning sign to the bulls that the bears are really trying to push this down. And then the next major level comes in at 55.30. And then the actual very, very, very big level down here at 52.58 will be kind of the make or break for this market should they get down there. Again, this is why key levels matter. I give you a down path and an up path because you have to know where the support is and what happens if it breaks. That's what's important. Who cares where the market goes? Understand that you can trade off of a level, and if it breaks, look lower. and vice versa. You can trade off of a high level, and if it rejects, you're looking for that, and if it doesn't, obviously they're pushing through. So you have to understand how the market works in order to trade it effectively, and then use setups. So we got the move down A and B so far. It is possible. Now, they haven't broken on the ES. They have not broken this low, but they did on the SPY, so I'm thinking they're going to on the ES as well. They haven't broken this low, so it's technically possible. This is A and B and C of 5. Remember, we are in a diagonal, so we are dealing in three-wave structures. So that's why you're doing ABCs instead of true impulsive moves for each wave. So you have an ABC over here for 1, 2, an ABC for 3, ABC for 4, and ABC for 5. That's how diagonals work. We would be looking for C up out of here to the 6,300 plus level. And again, I think that's much less likely, but they did hold on ES, and should they hold that low, we would be looking for that kind of move. So pretty clear on the ES. If they break down through this low over here from the 20th, then we would look for them to come down into the 57.85 to as low as 5,600 area, into this blue box. A lot of support in that area. The bulls really need to defend. If they hold this low and break back higher, we would look for them to break out, and 6,300 in a squeeze would be where we'd look next. Over on the NASDAQ. Okay, on the NASDAQ, we're looking at very, very similar situations. They had to hold this wave 2 low to keep this immediate structure alive. They did not do that. They broke through it yesterday. So with that, breaking the low on the NASDAQ, another reason I think the ES will follow through to the downside and break that low. With that, we would look for the NASDAQ to continue. The 1.0 is at 20,663, but I don't think it's unreasonable to see the 20,300 level. There's a ton of support here. If you look across between these pivot highs and pivot lows, you should look for the bulls to defend, as well as some moving averages in there as well, and some fib support. So you would definitely look for support to hold that area. And if it doesn't, again, major warning sign to the bulls that the top may be in. And we'd be looking at the April lows as a possibility next. So to the downside, they're looking 2663, 20,321. They really have to hold this number down here, this 20,110, this wave 2 low. Diagonals cannot go below wave 2 and wave 4. In other words, wave 4 cannot go below wave 2. It can enter wave 1 territory on a diagonal, which it's done, and or which it's about to do, rather, and then that's what we would expect, and then an ABC back up for 5. Should that happen, we're looking at the 23,000 plus area. So as of right now, falling through on the ABC to the downside, 20,663 to 20,300 would be where we would expect wave 4. Looking for support in that area, and then back up into this 23,000 plus area, depending on how high they want to push back on wave 5. So really cut and dry here. As long as they hold the support below, we look higher. If they do not hold that, that's a major warning to the bulls. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to our webpage. Once you're there, check out our membership plans page. We have 2 incredible monthly plans that both come with a 7-day free trial, because I want you to get in there. I want you to make sure you love it, become part of our trading team, make sure it's for you, and make sure it's where you want to be before you ever spend a penny. You can cancel at any time, and you literally have nothing to lose by checking us out. If you want to be part of these swing trades or even see them in action and not trade them, you can just come in and watch for a week. Make sure it's for you. I really encourage you to get in there and see what it's all about. Now, we also have our educational material. We have our Elliott Wave 4 Beginners Online course and our Advanced Elliott Wave course. And these courses teach you how to find the key levels that we trade off of so that you can set up your own trades even without the indicator. These courses are incredible teaching materials. It's everything that you need to know about the markets to make sense of them and to understand why they turn, when and where they turn. We do it in bite-sized chunks. In the advanced course, we go through all of the harder, complex things like advanced fib levels, diagonals, which we're in deep right now, double and triple threes and how they work, flats, triangles, trading Elliott Wave, everything you need to know to make sense of irrational markets. Now, if this is a little bit complex, even though you can see on the screen it's helping our traders win a lot of money, or you're just getting started with this, you can check out our Elliott Wave 4 Beginners area. In there, we have real traders making real money and finally understanding the market in a way that makes sense. It's so confusing when good news makes the market go down and bad news makes the market go up. That's because the news doesn't matter. If you look at the news with a rational mind and objectively, you will see that it makes no sense. The news is not part of the market. It is simply a catalyst, and or it's already priced in. The market's going to do what it's already going to do. The tone of the news means nothing. Elliott knew this long ago, and he knew that key levels mattered, and that's what separates you from the rest of the traders. In this course, we have 25 videos in 3 parts. You have an introduction where we go through your mindset, why it works, how it works, all that kind of stuff. The chart setup and tools, where we go through all the tools you need with Elliott Wave and how to use them. And then the Elliott Wave 4 beginners area. We go through each of the waves, how to dissect them, how to understand them, what their key levels are, how to find the key levels, how to trade off of them, the pivot, the corrective depth theory. Everything you need to know to make sense of this irrational market. The cool thing is, if you want to get them at a discount, you can get our bundle and get both of them at the same time for $37 off. Or if you just want to get them for free, check out our monthly rooms, as they are included in that price. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing and day trade, and we trade quite often in my room. Now, if you're looking for futures trading, individual stocks, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, advanced training, and his reduced risk binary method that crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures those trades that's so unique. It's really something you have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where you put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today. We would look for some follow through out of the ES to break this low, get down toward the 1.0 here at 57.85, and then we would look for support out of this blue box or just above. If they're able to hold here and push higher and break back through 60.30 and then over the Christmas high here, the Christmas Eve high, if they can break back over that, it's very likely we squeeze to 6,300 and pretty quickly at that. So all eyes are going to be on this low here from around December 20th. If they break down below that, we'll look at the blue box next. Over on the NASDAQ, same type of deal, although they've already beat down the low here. So you do have technically a C wave in place, although I'd like to see them get down in this 20,006 to 20,300 area. There's lots of support in that area. They must hold 20,110. If they get below that, that's a major warning to the bulls. Once they do, or if they do hold support, we would be looking for a very strong rally in an ABC format back towards 23,000 plus to complete wave 5 and potentially give us a top in this market. Guys, it's great to be back. It is the weekend, so we'll have a couple more days off here and then full speed ahead next week. It's great to be back. Grab a drink, get yourself out of the house, and I'll talk to you next week.